We'll just do it live.
Yeah.
All right. So this is what happened last night on Finance Junkies. Okay. We had a moment. You had to be there for this moment. We're going to watch
everyone on Twitter. I think everyone on Twitter. This is going to open up that.
Here's what I'm going to do. First, I'm going to put Carlos's Twitter. We got to get this man to 500. He's growing like crazy. So we're going to get him to 500. Everyone after watching this needs to follow Carlos. Carlos is at 495.
Yeah.
All right, we're going to get to 500 tonight.
If this makes you laugh, you gotta throw me a follow.
Okay, here we go. Carlos' Twitter in the description. And we're not just putting it in the description. We're pinning that shit in the description or in the chat. So it's there the whole night. All right, here's the clip. Here's the clip. You have to be there for this, and don't follow yet. After you listen to it, then you can decide if you want.
Let's all enjoy it. Let's all relive it.
Okay, here it is. This is it. This is Carlos talking some story.
Classic.
The caption is pause. Here we go. We're gonna watch it twice. Here we go.
And I went on a trail. The first bump, my hood popped open, and I had, and was flapping around. Then her brother came by, and his Ranger, and ate my ass out. I was like, "Fuck."
Ate your ass out.
I realized after I said it how that's
okay. Your brother?
I was not going to slap, but I knew the Kelly was getting ready.
I know that's going to be a clip that's short.
It's like
I told you. I knew at the moment. I'm like, damn.
I'm not going to laugh, bro. I saw Vitaly's face as soon as I was like, here we go.
I go to autopilot.
Yeah.
One more time. Here we go.
Oh my God.
For the 177 people, if you weren't here last night, this is why you got to be here every night. This was just.
But this is why you got to watch Finance Junkies live.
This is it. Here we go.
And I went on a trail. The first bump, my hood popped open, and I had, and was flapping around. Then her brother came by, and his Ranger, and ate my ass out. I was like, "Fuck."
Ate your ass out.
Yeah. I realized after I said it how that sounded.
Okay. Your brother?
I was not going to slap, but I knew the Kelly was getting ready to say something.
I know that's going to be a clip that's short.
It's like an automatic.
Okay, why did you say that? Can you explain some of your logic behind how that came out of your mouth?
I was telling you before we went live that I said on Twitter, it was literally 3 sentences we're trying to get out at the same time, and the wrong word from each sentence got out. Like I was trying to say, like her, my boyfriend, my girlfriend's brother, beat my ass, and ate my truck for breakfast. You know what I mean? Like it's like 3 sentences like that, but what came out was ate my ass. I mean, you just can't make it up, dude. You can't make it up. It happens. That's what happens when you go live. What is it? We're going live like 5 hours a week.
5 hours a week, more than that. Yeah.
It's so funny. I knew that was gonna happen, but I don't care. Sometimes it's you, sometimes it's me, sometimes it's Vitaly.
Justin said, "No, you handled like a champ. It was great." I was doing squats when I heard that this morning.
You, man.
Almost killed, bro. Because my laugh makes it funny, but Carlos saying it just out of innocence, and then Vitaly being like, "Huh, what'd you just say?" It's like the combination of that. I think is just. I just couldn't stop laughing.
It's gold. You can't make that up.
You can't make that up. All right, so we're waiting for Vitaly and Kris. We don't know where these guys are, and they might be pinching one out or something. So we'll play with some of the we'll get into some of the comments. Inbound, thank you for being here. Too much SoFi FOMO on this channel. I'm playing RuneScape right now. Nathaniel, hello. Palantir Research, what's up? Juki, I don't know how to say your name, bro, but I know who you are. Carlos, why did you choose Sphere Cubed as the name?
Interesting. I read a book when I was 18 that really shaped my life. It's called The Mind of God. I forgot who wrote it. And it has to do with trying to rectify religion and mathematics to prove that God is a mathematician. Anyway, I like the idea of cubing a sphere, right? So like a cube, or you understand cubing in math. It's like when you multiply it 3 times, but also the image of a sphere inside of a cube. And
have you read The Alchemist ever?
I did read that. I remember reading that a long time ago, and I wasn't that impressed. It's a couple of those books, but
it's one of the books that's in every English 9th grade or 10th grade class. I don't remember. I know Santiago was the name of the main character, and what he touched turns into gold, something like that.
Mm-hmm. Yeah, I mean, I kind of prefer to read philosophy books or something from the actual philosophers. So I read a lot of psychology actually when I was going to college. There's a great book, if anybody cares about this stuff, called Man and His Symbols. It was written by Carl Jung. Amazing book, man. An amazing book. And that was another book that heavily affected me. It was like the right book to read at the right time. when I was 18 and still trying to formulate my critical thinking,
Political
skills,
ideals, all that stuff.
all of that. Yeah, all of that kind of came together.
Did you read Ayn Rand or listen to Ayn Rand?
No.
Okay, she's very self-actualization, libertarian. Elon and Peter Thiel actually engaged with her philosophy a lot. Yeah, most people don't know that much about her, but she was a pretty big philosopher. I'm sure some people in the chat will know about Ayn Rand. The Genealogy of Morality by Nietzsche. Yes, John, that's such a good one. Oh,
my old guitarist, I think, turned me on to that. We were heavy on Nietzsche. You might even see him on the wall. He's
really?
Yeah, with his poster. Yeah, this guy that used to play guitar with, this guy Dave, the man, like one of the best, craziest, insane guitarists I've ever met. He was big on Nietzsche when we started jamming around 2005, 6, 7, and when we just talk a lot about that stuff. Or what was it, the Prince? We debated that for a long time about whether or not it was like better to be loved or feared.
I just got the text from Vitaly. He's he might be late or not make it tonight because he's working. I didn't even realize that. Okay, so we're just waiting on Kristen. All right, so we'll get into the market. Oh, there he is. There he is. What's up, brother?
What's up, guys?
What's up, homie?
What's up, homie? So first of all, how was
Disney?
Give us the actual tea on how was Disney? I know you went for your niece, but did you enjoy seeing Beauty and the Beast, all that stuff? Like, give us the inside scoop on that. You're muted.
Okay, so it was good. I liked it, but I'm an adult, like Disney Hollywood Studios is specifically geared towards kids. Like there's no like real roller coasters or anything. Like some of the rides are kind of cool, like Star Wars, Rise of the Resistance and Smuggler's Run, but for the most part, it's for kids. So yeah, I wouldn't like if you're an adult going as an adult, I unless you're like a really big Disney person, it doesn't make sense to go. I will say this:
churros are for adults.
Huh?
Those churros are for adults, bro.
Yeah, Frozen was awesome. Like they had this thing called Frozen Sing Along. That was really good. Like really like that. Like they had all these.
They do this. They do that at the Pantages Theater here in. Oh no, you don't. Yeah, they have the Frozen Sing Along out here at the Pantages Theater in Hollywood. It's awesome.
Yeah. I mean, the finale of it when like Elsa comes out to like sing the song "Let It Go." Bro, that was I was like ooh ahs about it, but other than that, it was like a lot of walking and it was like a lot of running around and just what's funny is like the entire time I was just calculating in my head like, damn, Disney must be making a killing, dude, because the amount of money that was being charged. Like me and my brother was telling me what like the ticket prices were for the 2 days that we went. It was nuts for 3 people. So it's like, what the hell? And then the food like inside was crazy.
You had a lifetime pass? What is this?
I worked at when I worked at ABC, part of what they gave you is this pass. You could go in there any days except for like the major blackout days for you and 4 people. And when you see people are paying $400-500 just to walk through the door, that's on top of what you have to spend, bro. It's a money printer,
dude. It really is. Like if you saw the amount of people that were there, there's no way you would have thought that this was a recession. Like it was unheard of how many people were there. And then on top of it, I'm thinking about like the total cost of just operating the place. And it's not that high. Like, I mean, yeah, it was.
Are you bullish Disney or no?
I mean, for the parks and recreations, probably, but I wouldn't like, I haven't done any deep dive into Disney. Like it's not something that I've looked into. So I don't know.
All right, let's get into the market. We've had a very, very exciting day. A lot of stocks went up. We had a lot of green, maybe a little bit too much euphoria, and we'll see what happens throughout the rest of the week. Carl, yeah, you're agreeing on that.
Bro, I had so much green today. I'm like, this is just not going to last. Like,
the debt ceiling negotiations are not final, but they're being perceived as final. Let's start off with you, Kris, and then we'll move on to Carlos. I was about to call you Sphere Cubed. By the way, Carlos's Twitter is pinned in the chat. We are trying to get this man to about 500-600 followers. I think he was at 495. I'm sure he's at 500 now.
I'm at 495. Damn,
you were at 495 today. Where are you at right now? You were at. There you go, 504. That's awesome. I got 500 on Twitter.
Damn, thank you guys.
Trying to get through
1,000. It was that one tweet I told you. I sent you I sent you guys a link. Did you see that?
No, I didn't.
I went to bed super early. I'm sorry, I don't mean to interrupt, but I went to bed. I went to bed super early in the morning for me because I wanted to wait for the markets to open. I actually was watching your show when you did the markets open.
Okay,
very refreshing. So I wanted to buy some SOFI calls. By the way, I did. I picked up 10 calls this morning.
Okay,
but So I just commented on some random video that I saw on the, on a Twitter feed. And then I went to bed and I woke up with like 5,000 likes and 150.
Wait, really?
Check out the link. Look at the link I sent you, bro. It's like over
Oh.
11,000 likes in 10 hours. I couldn't
Holy
believe it.
mackerel.
And I was texting you because I know Kris has a lot of followers. And I'm like, dude, is your freaking Twitter notifying you like all day like this?
Yeah, it's
Bro, how do you? Yeah, I
okay,
just
so
commented.
footage shows Cameron Robbins, 18, who jumped off a cruise ship in the Bahamas as a dare on Wednesday. He was still not been found and the search has been suspended. You tweeted, the sounds of the cruise ship you just jumped off fading into sounds must be one of the most terrifying. Wow. Bro, this got 840,000.
Dude. And it was 8:30 in the morning, your time. So I went to bed like right after that thing happened. And then my phone was just going crazy all morning.
Wow.
And I woke up, a bunch of people started following, people commenting and stuff. And that's when I said, how does Elon Musk do that? How does like AOC, how do they handle that?
So Carlos, you right click on the three dot. Well, you click on the three dots, you can go to mute this conversation. It's happened to me a couple of times where my tweet's gone a little viral, and it's just like you wake up and it's like 20 likes and then another 20 likes. So you have to just shut off the like machine on there, and just because if you distance yourself from it, then people can't really follow you. Let's say you've made something intelligent for them to follow on, or they want to follow more comments from you.
Mhm.
So I would just say mute this conversation so that this way your name will still be on there, but you just won't get the alerts.
That's a good call, because even right now, it's just vibrating every 5 seconds. And it kind of muddles up the other interactions that you're having with people. Like I've been tweeting about Apple, getting excited.
But that's how they get you. The fucking dopamine they get you with sending that shit, and then you're hooked on the app all day.
At first, it's cool, but then after a while, you're like, this is just annoying all day. Anyway, Kris was not around yesterday, so we got to get him. The floor is yours, brother. Yeah.
So Kris, here's the question to take it off. C3 AI, I think, explains the momentum for the day, up 35%. This is a company up 300% in the past month. The earnings have been horrible over the past couple of quarters. They have earnings tomorrow. So the question is, do you think the momentum that's kind of allocated to a lot of these AI plays and seeping over from things like NVIDIA is justified? Do you think it can last? And kind of where do you see the market heading over the next week as a result of all this momentum?
I honestly can't tell. It's really going to be dependent on C3 AI's management to kind of shepherd along the story as far along as they can take it without seeming untrustworthy, only because the numbers don't necessarily justify the value that they've gotten over the last like 3 months, which is kind of crazy. Like literally they're trading on the name AI. So I think I know this is stupid, but a lot of people they're just be like, oh, I want to buy into AI. So let me just buy a stock called AI. And I don't know. Maybe that's some of it.
That's exactly what's happening. That's literally.
No, I don't.
What was
I
that
don't
stock
know.
in 2020? That stock in 2020 that ARK was pushing and people bought the wrong stock. Do you remember that? It was a medical. It was a medical company or something like that, I believe.
Someone in the chat, if you know this one.
If you know what I'm talking about, and that stock jumped like 2,000% in like a day. And it was because people were typing in the name of the company and not the ticker. Anyway, it was Zoom. Yeah, it was Zoom. Right.
So the thing is, when I look at this company, I'm seeing this massive run up in the stock, but I don't see the numbers that justify it. Maybe I'm missing something. I did a fair amount of due diligence. I know about Baker Hughes being a large portion of their revenue. They have contracts with the Air Force, all that good stuff.
When did you do this due diligence, by the way? Over the past couple of weeks?
No, I did it like 6 months ago, man. And I've been keeping my eye on this company. I mean, when Tom Siebel's involved, with Siebel Systems, these are CEOs who've proven their mantle in the past. So you kind of want to give them a little bit more credibility than that a lot of people wouldn't give them. So I didn't just look at these companies like, oh, this is some kind of fraud that people need to just ignore, because there might be a story behind it that we don't necessarily know about. I know one of our friends is actually somewhat bullish on C3, but I also know that he's smart in that he will keep stop losses.
There's a fuck ton of puts that are protecting that position.
Yeah. So
he actually told me the amount of money he's up today. And he told me it's a lot, but he knows that it's kind of unwarranted. So he has puts and protect himself.
Yeah. And that's the key with investing, right? Like you can love this, you can love the company and hate the stock, and then you have the opposite effect as well, so which is you hate the company, but you love the stock, right? So it's like, these are the catch-22s that people have to like really do your own like research on. I know a lot of people are, right now caught up in the AI craze, and which is good. I mean, I am always trying to feel out, okay, which companies are actually doing AI versus which companies are, saying they do AI, and then which ones are ultimately going to benefit from AI and which ones are not. Like, I try to find the companies that are hidden in the rough, right? Like, not like, when it comes to zero to one, right? In 0 to 1, they like Peter Thiel, says it right there. Like, you want to invest in the companies that say they're not a monopoly, but they're actually a monopoly.
Yep.
You want to avoid the ones that say that, oh, we're going to take it all, but they're not really that competitive. So that's what's leading me into the AI craze right now. So I'm being very selective on which companies I believe will ultimately benefit from AI. And
But you do believe it is a craze that the market is consolidating to get exposure, but it's leading to some unwarranted premiums on companies that are just unwarranted because they might not be able to deliver. Is basically what you're saying.
well, I would say they're just setting expectations a little too high. A lot of companies, they're good companies. They are doing well and they're doing AI like they're supposed to. It's just when you have unwarranted expectations, that's bad. Like NVIDIA right now, NVIDIA is doing everything right when it comes to AI, but is the stock price warranted? Like, I don't know. I honestly, I can't say
The
yes or
guidance,
no to that
dude,
question.
their guidance is no joke. The guidance that they had above what's expected. So
Yeah, but Carlos, here's the question that I would phrase to you. Is the
yeah.
guidance for Q2 ultimately the guidance that they're going to be giving for the next 5 years? Or are we just seeing this short-term bump in everyone rushing through the door to get into the AI craze? And then the minute like that craze is over, everyone is going to be dumping or not buying the product. Like, here's an example. When Bitcoin and all the crypto stuff was around, everyone was like, oh my God, we need to buy, we need to get in, buy more GPUs. And then once crypto fell off a favor, everyone was just like, hey, we got all these GPUs now. And so you can see that whole thing happen, especially with a company like NVIDIA. Like, remember NVIDIA? It went all the way to 341 during the crypto craze. And then what happened? Because demand dried off and died off, boom, it went back down to almost 100 something, right? The question at this point is, how much further can AI drive NVIDIA higher? And the honest answer that I'm coming up with is, I have no clue, but I don't know where the top is. So if I don't know where the top is, I'm not going to try to touch it. On the other hand,
built into NVIDIA's business is a bit of a planned obsolescence. Like, the 2080 Ti was the hot shit until the 3080 Ti. And so it's an arms race, right? And so I hear what you're saying, and it's true, but most of the time the markets only care about the next couple of quarters. Like, long-term investors are different, right? But most of the time the market only cares about the next quarter or two.
Yeah, and see, I think
go ahead, Chris. One point, then I got to share something. Go ahead.
Yeah, I just think that's I think that's the key right there. If you're a long-term investor, is it worth paying $400 a share for NVIDIA at its current PE?
No,
What is it like? That's the question. So if you're a long-term investor, this is not what you want to see. Like, you don't want to see the company that you are wanting to see that nice secular long-tailed growth jump up in a short period of time. Like, that's like your minute. That's like your signal to say, hey, let's take a step back. Let's kind of reevaluate.
So so this raw question for you, then I want to play this video on NVIDIA that I think is really good. You are saying you would rather have 100% gain in 7 months versus 1 month and feel less compelled to sell because you think it's more warranted. Versus,
Can I guess what you'd say? I think Chris would take that gain if it happened in a month and sell 75%.
Yeah, absolutely. I think
keep the 25 just in case.
So is there no time where it's warranted for it to go up that much in a month, or you think any 100% months are just insane for most companies? Like, it's just not natural.
Unless they're sorry, go ahead.
I was gonna say, aside from like a short squeeze, or
so yeah, a short squeeze would be one of them. But more importantly, if there was a secular event that happened that caused that whole thing to happen, like, let's say right now the earnings that were reported were just crazy earnings that were reported, right? Like, NVIDIA, they had a pretty okay quarter. They didn't have a great quarter, by the way. Their guidance was really high, but their numbers were okay, right? Other companies that also were overlooked, but then all of a sudden are now like performing like gangbusters, like Tesla did, and then they had like a secular tailwind of an entire industry behind them. That's a whole thing too, So yeah, I guess you have to be very like selective on like the S curve scenario, but I'm not a big believer in S curves, by the way. Like, I think maybe 1 out of every 1,000 companies actually have an S curve. And I think most companies, like the other 999 that are successful, have like this nice, steady, like diagonal move higher.
Here's what happens
that-
to most of them. Yeah.
Yeah. That
But
there's
it depends. S curves, I think apply specifically to adaptation or disruption of other technologies, right?
Correct.
So it's
Or
not,
like external factors like solar, right? That could create
exactly. That's not that doesn't mean that every company grows on an S curve, but it means disruptive companies that are trying to get penetration or steal market share from something else. They do tend to grow that way.
And that's the thing though, when companies end up like getting the reputation of being a company that's a disruptive company, sometimes premiums can get way out of hand. I mean, it happened to Tesla. Tesla retraced all the way back from $1 trillion market cap to $100. It happened to Enphase, where everyone was a big believer in Enphase. It went from 350 down to 150, right? So I think what it is people, I do believe that disruptive companies do exist and S curves do happen, but what typically happens is a lot of investors, they pile on towards the end and take it much further than it's supposed to go, and then you have a retracement down again, and then like I said, you have an opportunity to buy. Like I'm seriously looking at Enphase as a buyer right now, even though that's something that I wouldn't have considered about 2 years ago. Why? Because I actually do believe that they have a disruptive product that can take on a lot of the challenges that we're seeing in the energy space, when it comes to like electrification of the grid and X, Y, and Z. So it's just one of those things that I'd rather wait for a pullback a little bit.
So let's take a look at this. This is NVIDIA. I think this is a really good clip. I saw this today. This is a guy who bought NVIDIA in 2015. He's talking about why he sold 25%. He's actually going to speak to the logic and psychology of buying and selling, and also to NVIDIA in and of itself. He actually does some really good technical analysis as well.
Use this gain to take some profits of some degree. You've sold a quarter of your position, is what you told our producers. Is that correct?
Yeah, this morning it gapped higher, and I took the opportunity to just take something off the table because, man, this is one for the ages. And I didn't want to sit here in a reversal and not have done something.
Refresh, our memories, if you could, on how long you've owned this stock. And what you remember when you first bought it and what the first price you paid for it was?
I don't remember the exact price, but it's like I bought it in the summer of 2015. And I remember coming on the show, we were in New Jersey, and said something to the effect, Netflix was struggling at that time. And I said, maybe we ought to replace the N with NVIDIA. And, I've believed in the stock ever since then. And it's thousands of percentage points, obviously. I read this weekend that NVIDIA over the last 10 years prior to my getting involved was the number one performing stock, up 10,000%. So this is like just you could live your whole life and never see a stock do what NVIDIA has just done ever again. And we may not. So it's been a historic run. But I want to talk about some of the shorter term dynamics here.
So that was the thing I wanted to share, right? I mean, this is a once in a lifetime thing. He took 25% off. He looks sad that he sold 25%, but even he goes on to say the RSI is 86. The last time it got that high of an RSI, there's a massive drawdown. So he's been through this 3 times. He hasn't sold, but he's seen the pullbacks. And as you're saying, Kris, sometimes there's a massive premium, especially when that RSI gets a little bit too high. And he took 25% off the table off a company he's up thousands of percents in terms of return. Carlos, you're muted.
10,000% is no joke. That's insane.
That's insane. That's insane.
Every dollar you spend, you get 10,000. Are you kidding me?
That is insane. By the way, before we get back into the podcast, for the first time in I think a week, 24 minutes and 11 seconds, we have hit 5 hundo. Shout out to 5 people here. Thank you for being here. Thank you for being here.
And we're back under 400 now.
No, we're at 518. So Carlos, let's get your thoughts on NVIDIA. You agree with Kris? It's a bit pricey right now.
Yeah, I think it's a pendulum. Momentum matters, right? It's like people running through the door to get in, or people rushing through the door to get out. Like this is why when we talk about technical analysis, it is important to look at these things. It's important to look at RSI. It's important to look at these things. And if I was in NVIDIA, I used to have a position in NVIDIA, but if I was in NVIDIA, I just don't know anyone that wouldn't be taking some profits right now. 25% seems to make sense because you're up so much. There's no way that he's not covering his initial investment. Then you can just chill.
Yeah, and if you're a long-term believer in the company, when it's down, you could buy in again. It's not like the other thing to also remember is that by holding on to eke out an additional gain where you think it is, let's say, like, okay, let's take a step back and let's assume, okay, NVIDIA is going to run further up. How much further up do you think it's going to run? Right. So every higher movement up is going to bring a lot more drag with it. Like there's going to be a lot at this point. You're just chasing. You're chasing to see you're chasing the top, and you don't want to do that. Right.
The redlining. It's like revving the engine. You're redlining. You're in there. You're pushing it.
Yeah. And so the thing with me is that if I trim right now, I could, like I said, once things become a little bit more normal, the market wakes up to reality of things, I can buy in again, and I'll be okay with that. And that is the bet that I'm making. Okay. For you guys, for other people, they want to hold long term for the next 20, 30 years. They believe Jensen and this is going to be next, like the most valuable company on the planet. God, dude, all for you. Hope that happens. I wish I could join you on that journey, and maybe one day I will, but I'm going to wait for a pullback. When it comes back down, I know the story behind it. I know the theories behind it, and that's when I'm probably going to end up buying. And I also think that there are other companies right now that haven't necessarily gotten the boost yet, like SOFI, because I've been buying.
It's crazy, dude. It's crazy you said that. I was about to be like, yo, sorry to channel surf.
Let's transition to that. Yeah.
SOFI and specifically you Amit with Palantir. You're not Palantir has made you hold now, right?
Basically, yeah. Basically.
All right. So how do you feel about the run up? It was over 50%.
Well, look, I feel the same with Kris. I think Palantir is technically overvalued because of the growth rate at 18% guidance. It can't be the market cap it is with that guidance. If management is sandbagging in Q3, Q4 is 30-40% guidance and the growth rate averages to 25-30%, it might be a little undervalued, especially if the market's willing to give an AI premium. The thing is, we don't know if this is going to happen. And so for me, I don't want to touch this till 2030. And so I'm leaving it there and it'll ride. If it goes back down to 10, I'll buy something.
Yeah, you're not taking, okay, number one, you're not taking anything off the top, and you don't think that this is institution sort of laying some sort of
it might be, but I personally cannot time it as well. Definitely not as well as someone like Kris, who is way more experienced in understanding pullbacks. And so for me to come back in and get I can't do that. Right. And so for me,
would you buy some puts to protect the gains that you have right now at the $15?
No, because I don't have any gains. My average is 15, so it's barely breaking.
But then you've actually lost money, because how long have you locked up this capital?
It's been a while. It's been a year and a half.
Right?
And I agree with that. But look, I'll keep DCAing. I mean, my philosophy is very simple with Palantir. I will keep DCAing because I want it for the next 10 years, and that's it.
Do you have a dollar amount that you want invested? Are you looking at a profit point?
I would like to get to 5,000 shares.
5,000 shares. Okay, yeah. I like to do share count. So what do you do, Kris, to decide what your allocation is in the company? Do you decide the profit that you want based on what you think the target price would be, or do you think about share count?
To be honest with you, I try to look at companies that grow in excess of 5% of my portfolio. The minute they start doing that, then I really, really reevaluate the thesis, right? It's like, if I allocate maybe like 2.5%, 3%, and then it jumps up, like let's say Palantir, to like 5%, I ask myself, whoa, wait a second, this just kind of went up really fast. Like, what happened to it? And then the questions start like, okay, is it justified? Is it not? Do I sell some of it and do I come back on a little bit later? Like, I have triggers for each stock that I have. And then there's other companies that I am overtly bullish on, like I said, like TFC and SOFI, which I think are going to be really good companies to be in for the next couple of years. They're very undervalued. The sector itself is undervalued. They have a lot of catalysts coming on their way. So you've got two different things happening. You've got mean reversion for TFC, and for SOFI, you've got catalysts that are coming along, like the student loan repayment schedule coming back, like mortgages.
Also a good level. It's also a good level market cap and stock price wise to have a lot of option plays.
Yeah, and the other
Pick
thing
up,
is
the options
the
on it.
liquidity in SoFi is awesome. Like,
So let's properly transition to that. Chris, why can you update us on your bullish thesis for SoFi? Why are you getting more bullish on the company?
well, number one, they have a very similar pattern to Palantir. I think one of our viewers, I forgot, Jesse Dow, I forgot his actual Twitter name. You know who I'm talking about. He actually did a relative comparison between SoFi and Palantir, and there was a lot of things that are very similar. And I think he's right on the right track, because my thinking was in the same boat, which was once these guys reach gap profitability, what is likely what is the market going to do? How is the market going to price these guys? Are they going to price them as a growth company? Or are they going to price them as a value play? Because some of it is value. Like, I think they're trading under book. Yep, exactly right there. So if anyone isn't following this guy, I highly recommend you follow him, Jesse Lee Dow 1. So he did a really good comparison between SoFi and Palantir. And so, yeah, I think we could see a run up in SoFi, very similar to what happened with Palantir.
What do you attribute that to? Like, at the end of the day, it's all math and like numbers, and so it's not necessarily a coincidence, right? But those charts do look incredibly similar, but they're in completely different sectors. Yet they seem to be trading the same. It's actually like a comparison that I was making between Tesla and Bitcoin, believe it or not. Like, Tesla trades like a crypto on the stock market, which is weird. But we can have this discussion as to why. But like, specifically, why do you think SoFi and Palantir seem to be?
I personally think they got both grouped in as meme stocks. They both fell 85%. And then Palantir just got quicker to gap profitability. The one thing about Palantir is their momentum has stayed after the second quarter of gap profitability, because it's been profitability from operations. The first one was just some accounting bullshit. SoFi, when they become gap profitable, it's not going to be accounting. It's going to be like real hard profits. And I think that's what's going to lead the chart to become very similar.
But I
think they also have massive retail bases as well.
Been leading to this, right? I think we looked at the trailing 12 months. It's been pointing to like, this is now the crossover point where
they've just been beaten up. They've both been so beaten up.
But SoFi too, in particular, if you're, I would not want to have been in the student loan business when a pandemic happens, man. Like,
and
so
the way they've changed their business, to me,
yeah.
They've gained my respect. And I think, Chris, you would say
absolutely.
The same. Like, the way they've gone.
You know what? In a way, if that company does hit the valuations and gets to where we think it is, obviously, because we're betting with our money, it actually was a very good thing that happened early on, because it shows you like the resilience, and it shows you the power of management, right? Because another company could have let that die, right? That could have been the nail in the coffin, and nobody would have questioned it. They'd say, well, it was your business. But Homeboy was like, nah, man, we're not going out like that.
No, absolutely. I think this just goes to show you, when the times are tough, which CEOs are going to tough it out and which CEOs are just going to fold and put their hands up and basically just lay down and die, right? And Anthony Noto put his own skin in the game. Like, he really put his own money up for grab. Like, it was not a situation where it was like there was a guarantee that Noto was even going to get his money back, So when I look at leadership like that, like, yeah, I said this even when I thought SoFi was as not of a good company to invest in, because I was one of the people that was actually very critical of SoFi. Everyone knows that. My critique of them was primarily related to the risk of their personal loans, which, you know what, is something that was addressed by management, and they addressed it in a way that made sense to me. So I had to change my thesis on it. And once I did that, and you combine it with the valuation that they were trading at, it was like a no-brainer to me. Like, why SoFi?
I kind of had a little, I'm not gonna lie, I kind of had a little hate for him, because he was like the COO of Twitter. I was like, what the hell is this guy doing? Trying to run
I don't think he was you think he was involved in kind of the censorship stuff?
No, it's not the censorship stuff, but it's just like, he's not, these don't seem to be related businesses, right? But what you find is, like, there are some skill sets that do apply, and you can see, he's obviously a pretty scrappy guy. He wasn't a one-hit wonder. He was he's proven himself. That's why I say that this is actually a good thing to have happened at the time that it happened, because, man, he's shown why people should be following him, and then in the company, and in turn, investors should feel safe with him holding their money.
Yeah, capital allocation is a real skill that a lot of.
Did we just cross 600?
It just went to 594, right? When you said it was at 600 for a minute, I was gonna give it a couple of seconds. Let's wait till it gets to 600 again. Go ahead.
Yeah, no, I was just gonna say, like, capital allocation is a really big skill for CEOs to have. You know, like you need to know how to allocate your capital so that it's not just getting wasted. You need to know where to deploy it, when to deploy it, how to deploy it, so that you can maximize shareholder returns. CEOs that know how to do that, and boards, especially, that's the one thing I love about SoFi that I think a lot of people don't necessarily in the SoFi community like talk a lot about. I know that they have mentioned it, but they haven't like just outwardly spoken about it. They really do have a board that knows what they're doing. Like
Yes.
you really have to deep dive into the board of directors, because it's not just a one-man show at any company. Like Elon Musk is the only reason for Tesla's success. It's actually the board of directors that are under Tesla that make it happen. It's the COO that the board of directors hires in order to implement everything. You know, it's the board of directors that chooses how much executive compensation goes where, how to tailor the business. Also, what level of talent is on there. I think this week on All in Pod, I really like that, because one of the comments that we had was David Sachs mentioning one of his portfolio companies, like the CEO making bad business decisions, right? Based on like allocating some capital and doing some stuff on the cap table. And he was like, look, if I was on the board, I would have told him that this is horrible. This is not a good deal. But that only comes with experience. So you need sometimes people with capital allocation skills on your board of directors. And there's no one better for a bank, in my opinion, than someone who's formerly of Goldman Sachs, who lived this life. You know, so in terms of CEOs, I think Anthony Noto's the perfect person to be in this role.
When we eventually get into NVDA, that'll be a big topic of discussion too.
Yes, exactly. That's the other thing too. Like you look at NVDA and the CEO that they hired, the management team, they changed up their management team. This is not the same management team as 2 years ago. All right. Like some people are
like
built
same as Enphase. I mean, to be honest, it's same as Enphase.
Some CEOs and some leadership is good at founding things and like bringing things into fruition, while others know and understand how to cultivate the business and turn it into a real moneymaker, you know.
Chris, I want Carlos, you were going to say something?
Just going to say that's a topic for another discussion. We've got 9 minutes before we take the questions, because we're trying to do the 1 hour, right? I got a little timer going.
So let me put the StreamYard in the chat now. We have 577 people here. We touched 600 for a second, but we don't get to ring the bell. It's got to be at least a couple of minutes, right? So
we ate the 600's ass for a second.
Hopefully we can get this 600, but if not, still thank you 577 people for being here. StreamYard is in the chat. If you want to ask a question, please join. Have your camera on. Ask us a question. If you are new to the podcast for the first time, let us know in the chat.
They want to talk Target. This was actually a question.
We should talk Target.
This was actually something that I was going to talk to you about, like privately, Chris. But I guess what's you, me, Amit, and 577 of our closest friends. The crossover. You had a tweet today where you talked about politics and finance. Typically, we just try, I personally, and I think if I speak for Vitaly too, we just try to stay out of politics. But I think more and more it is really hard not to have your politics mixed in with finance, because you're seeing things like this. You're seeing essentially financial hit jobs on companies. That's one of the ways that people can express their disagreement politically is in the stock market. And so I'm curious why you don't care. You actually engage on that side.
Well, I mean, you know, people vote with their dollars, right? That's a form of voting. Like regardless of what people may think, you know, if I had to choose between one company that lives by my values and one company that doesn't, I'm going to choose the one that lives by my values. You know, plain as simple. Like, so I would say that now companies have to be, you know, companies back in the day, they typically stayed very apolitical. There was never a discussion about that. There was like, listen, whether you're a Republican or you're a Democrat, it's the same to us. Like, just come on in. We're going to try to be as politically neutral. And then over the years, there's been a big push to become more activist, right? And so
it was the 2000s. Honestly, it was like 2000. It was, I think, 2000 to 2010. There was a couple of bumps in companies that started to, like you said, get on board with certain things, activism wise, that just made sense at the time. But now we're so polarized on the extreme.
And I don't even think you have to have a political opinion to analyze this. People don't like some of the stuff they're selling, and they're voting with their wallets. The question is Target going to respond? And they're going to, just like Bud Light, are they going to respond? Or are they going to double down? Bud Light doubled down, right?
But Target did as well. And what happens is once you start going down that path, there's no way to win. So if you go down one path and you start selling products that a certain group doesn't like, and then you pull those
Tough.
off the shelves. Now the
Very tough.
original group is upset at you for caving. So then they boycott you, and basically you're boycotted on both sides, and you're done.
Well, I think the capitalist answer is which side. It's Michael Jordan's Republicans buy sneakers too, right? It's literally they have to make a cost benefit analysis as a fiduciary responsibility to shareholders of if we sell this shit, will we lose more money versus if we don't, and the other side's protest, will that outweigh the protest we're having? Because someone's going to protest. The question is which side is more vigorous about it. Because if we're in this polarized economy,
the question
right,
becomes why. Okay, the first question then becomes why do it at all? It's like someone made a great point. They were talking about they were showing Google's homepage on various days of the year. You know, whatever it was. There was certain holidays, it's not holidays of the year, but on Memorial Day there was nothing, and people complained about that too, right? Because there is no specific group that's going. Like the veterans aren't.
It wasn't nothing. It was
voting
gray. If you clicked on it, it took you to a Memorial Day thing.
Right.
It was,
Exactly, but
it wasn't as explicit as like Christmas or something like that.
But also because the veterans aren't considered a powerful group financially.
Well,
So
Google didn't take the Project Maven contract either, right? And
So yeah, right. So the question then becomes why do it at all? And then my second question is, do you think we're going to see any company actually go bankrupt as a result of something that they do politically? Not anything to do with.
Good question.
Within the next, say, 5 years, you think we'll see that? We're so divided politically. Is it going to be enough to tank one of these companies and take them out?
So here's my thought pattern. Number one is, why are a lot of companies moving like this? Like, why are they being a lot more? Again, I'll be honest, I think a lot of it is just performance. Like, I don't even know if the values really align with the company to begin with. I think what's happening is you have a lot of activist investors on like the top level, like especially like BlackRock and so on and so forth, that everyone is allocating their money via indexes to. And then BlackRock now has control over a large percentage of the company's voting shares. So they say like, look, we need to do this to be like this. So you have to be more inclusive, or you have to have a DEI initiative, or you have to have an ESG initiative. The company never would have had otherwise. And so what happens is, because they have their marching orders from their financiers, they have to do what they have to do. And they also get to put people on the board of directors. Once again, the board of directors really matters. So once the board of directors, they get a few people on there, they're like, listen, we need to do something for Pride Month. And so now the CEO has to kind of justify why not to do it. And at that point, it's, the board directors can remove.
They're saying money. If the board wants you to sell this shit, you're going to sell it. If the board doesn't, you don't. You think basically your argument is money controls.
But listen, to be fair, on the other side of that, in a capitalist society, why would you not take advantage of it? If they are identifying themselves as a group with money that want to buy products, and you can tailor something that you already have, slight premium, slight markup, do something in the in-stores and show 5 or 10%, everyone should be happy with that, including share. Like, everyone should be happy.
This is where people try to bring morality into it. It's like, oh, well, that's not ethical. It's like, well, this is capitalism. You make profits, or
right. Listen, and you own Palantir, so we know you have zero ethics.
That's so funny.
Zero ethics.
And so that's the thing that you have to be very let's say I was the CEO of a company, right? And I have a board of directors. The board of directors, like BlackRock bricks. Let's say they came to me and they said, "Hey, Kris, listen, we need to get involved in this Israel versus Palestine debate," which is the political hot potato, right?
Bro, before you continue, when I was on the national USA debate team and we went to the international championships, Israel and Palestine were not allowed to debate each other. Like, this is high school debate, bro. High school fucking. I was like, what? Like, it's random. The pairings. They're like, nope, Israel and Palestine can't debate. I'm like, why? They're like, they'll rip each other's heads off. I'm like, is it that serious? And then I did some research. I was like, oh, this shit goes deep.
Someone needs to call Dana White. Get in on that UFC 294.
That speaks to Chris's point. Go ahead, Kris.
Yeah, no. So I would just go to my board of directors and say, look, guys, I'd love to take a stance against either side, depending on what you guys want me to promote. But I think they would be really bad for the company in general, because there is no winner in this argument. I personally have a political opinion on who I think is probably more right than the other side, but that doesn't involve any of this stuff. And I'm not going to tell you guys who it is. I think both sides have pluses, and I think both sides have minuses. One side has a lot of things that they should be answerable to, and they're not answerable to it. And I don't like that. And I don't like the other side basically using a form of terrorism to get their political way, but I understand why they're doing it. So it's such even in my own brain, I have a conflict. So
Yeah.
imagine
When there's
the
billions of dollars on the line.
But I also think we have to be careful when you say words like using that people voting with their dollars is terrorism. Like that's beyond a stretch. That
But
diminishes.
you don't know exactly
the
what he
act-
means by terrorism. You don't know exactly.
No,
what
I think
that-
you're referring to the guy that was on CNN that said if you don't buy products at Target, it's financial terrorism. He said.
Really?
Yeah.
That's
He
what
said,
it said?
and he
yeah,
said
that's-
it is literal terrorism. And I'm
That's
like,
wild.
well, I think we need to get these words back in context, right? Because we
No,
call on
I think the one that perplexes me the most is like if you don't date transgender women, you're a bigot. And I'm like scratching my head like, wait,
It's like he
what?
actually
Like,
scratches it.
it's like I'm like trying to figure that out. Like, wait, so basically am I gay or am I straight? Like if I date a transgender,
And then when you got a lot of money on the line, these questions only even become harder.
that's like
yeah, so you're
things-
right. So you're the Target CEO, and they're saying, look, it's risky, but we could make say 10% on our bottom line if we have clothes or whatever it is, or products that celebrate say this particular month. If we don't do it and our competitors do, then they could make that money. So then we look bad if we don't. So who are you most responsible to? Is it the shareholders? Is it your own morality? Is it your employees? Because you see what some people are doing now. They're going to the store. They're buying it. They're taking everything off the shelf. They're going to the counter. They're saying they're going to buy everything. Once everything is off the hangers, off the racks, they upsell the protection plan. And then they say we forgot the wallet, and then they leave. Now the employees have to go back and restock everything, and they're just doing this over and over just to create problems for Target. You have to ask yourself, like, what's worth it at the end? Like, where do you, as the CEO?
All right, we got two people in the back, 45 minutes. I got to get this done in an hour. So, Chris, last point, then I'm going to bring them up. Go.
Yeah. Also, Target, I think physical retail in general is having a big issue with crime, physically people robbing
They're the
stores
front
and
line
looking
of some of
away.
this stuff now. Yeah,
That's the stuff that I'm like perplexed by. I'm like, wait a second. So the solution to the question is, so you guys have all seen the videos of people just basically taking shit and running out the door, right?
Lululemon, they fired the 2 employees for calling the cops. Like, what?
So this is the part that always confuses me. It's like, wait, so you want people to steal from you and then you have to close down the business? Like, where's your thinking short term? Where's your thinking long term?
It's because what's happened is the backlash. If they attack one of the looters, for example, or one of the robbers, the backlash on them politically and financially is too great, so they don't risk it. But then what you're basically saying is just come in and steal a lot of shit. You're seeing it in supermarkets. You're seeing it in basically everywhere, and it's all over the world. I'm watching the ones in London are outrageous.
All right, we got to get to people in the back now. So first up, Bailey, what's up, man?
Hey, how's it going?
How are you doing? So I know Bailey, Carlos and Chris, you don't know them. Bailey is a friend of mine. He's an investor in Aldia as well.
I'm sorry to hear that. Bailey. My condolences.
We'll get our money back one day, Bailey. Don't worry.
It gets better.
Every time, bro. They're like, well,
it's a low hanging fruit, dude.
Yeah.
Bailey, where are you calling from? And how long have you been watching? I know you've been watching me, but how long have you been watching this pod?
I'm calling from Australia.
I love it.
and
I
I've
love
been
the
watching
accent. It's so sexy. The accent is so sexy. I love it. Go ahead.
Thanks. I've been watching the pod probably like on and off since it started. You guys started at 12 o'clock my time, like midday. So I watched it like after lunch or during lunch or something.
That's great.
Okay, perfect.
Yeah.
All right, what's the question?
So my question was for Chris, but really anyone. I know, Chris, you do a lot of sort of portfolio allocation, more sort of centered around like percentage of total portfolio rather than like absolute value of shares. And you talk a lot about the business cycle on Twitter. Do you try and go overweight certain sectors relative to the business cycle to generate alpha, or is it just solely trying to find undervalued companies?
So yeah, absolutely. I will, like right now I'm 50% in the banks, which is unusually high, but it makes total sense to me because I think
I'm also 50% in the banks, by the way.
yeah.
You gotta do this as you.
So the thing is, like, when it comes to certain sectors that have been really beaten down and I see a lot of value, yeah, I don't mind going overweight and going over my allocation. The only thing is I will try to spread out the risk by being in multiple banks instead of just being in one, right? So it's like I love TFC. That is the one that I really am like invested in, but I also have a few positions in Zion Bank. I have some positions in Key Bank. I even have some positions in K-Web, which is the entire sector. So the thing is, like with me in portfolio
Wait, you say
allocations,
K-Web?
I say it. Not K-Web,
Did you
sorry.
say K-Web?
KRE. Sorry,
That's okay.
my mistake.
Yeah.
Mistake. Not K-Web. K-Web
I
is
have KRE
China.
as well.
It's China. Yeah. KRE.
Yeah,
So
I was like, that's
yeah.
totally off.
Yeah. So yeah, just to make sure that I'm somewhat protected against the downside. I try not to take unusual amounts of risk in just one company, but there are times where things get really ridiculous, and I will allocate more than 10%. The minute I think it becomes more than 10%, like I better be 100% sure that this is the way I want to be, and the fundamentals better aligned in the direction that I want them to. So like right now, TFC is getting to be a pretty sizable position for me. Not because I allocated money that way, but because, as Amit will tell you, our gains have been crazy, which is amazing, right, Amit? You know, so we
Bro, so it fluctuates, it's volatile, but when I see the gains, I'm just like, damn.
Yeah, so we did it definitely. We did it through options. So you know, the volatility is crazy when it comes to options, but we got in at a very good price early on, and we've been able to successfully leverage that. Now the thing is, every day when I look at it, I'm like, shit, it's above 10% of my portfolio. What do I do with it? And fortunately, I think this is one of those companies I'm going to let it run until it's supposed to hit the targets that I want it to hit. I'm not going to explain what the targets are to everyone on here. I don't want people following into my trade. And same thing. Like I sometimes I'm like, maybe I shouldn't even told Amit,
Yep.
but because
I want Amit to be rich.
no, the thing is, I want Amit to be rich too, but I didn't want Amit at the same time to be like, you know what, Kris knows what he's doing. I'm gonna go ham in this, and that's exactly what he fucking did.
But now I'm up so much fucking money because I went ham, because Kris knew exactly what
gambling.
the fuck he was doing, and yeah, that's.
But then again, you did it
Do you
your
look
way,
at,
and
do you like a weighting relative to the index?
I'm sorry, can you say that again?
Sorry, I was just gonna ask, do you look at weighting relative to the index at all, or do you just do you try and beat the index in that
No,
sense?
I try to beat the index. I think I try to find the most undervalued companies in that particular index and just go a little bit ham on that one. But I don't let it be like the craziest amount, unless like there was at one point Truist was way below the book value of, if you took the average book value of all the companies in KRE, and then you weighted against Truist, and then you looked at the fundamentals of Truist, where it's likely to be, like where it should be priced at, considering it's not a regional bank, it's a super regional, right? So
Yep.
it deserves a little bit more premium than, let's say, a regional bank that's only in a select sector in a very small part of the country. Like this is a company that was like really like undervalued fundamentally, and it still is really undervalued fundamentally. So that I didn't mind allocating way more than what KRE allocates. And remember, KRE is only allocating, I think, 1 or 2% to Truist. Like it's
more
yeah.
after the sell-offs and the other
Yeah.
banks.
Yeah, double check on that, but it's only, I think, 1 or 2% of KRE.
I think the thesis here is, and Kris has talked about Truist publicly for like a month now. When he's bullish on something and he just sees an undervalued opportunity, he will go ham on it. And I think that's the thing that makes him so unique from a lot of the people I've seen on YouTube in terms of just finances. Like, he'll tell you what he's bullish on, and then he'll do what he says. He's not that bullish on Palantir right now, so he's not going to fucking own it, right? And like, people kind of get upset about him doing literally what he's bullish on or not bullish on. And I think that's why your question is so good as well in terms of how does he allocate capital, because that's pretty logical to me, but you have to have some experience to be able to strategically do it. And,
for sure.
Just
How many positions do you have in your portfolio, Bailey?
I want to say 20 off the top of my head. But I don't like trading very actively. I was just gonna say Truist is actually 2.85%.
Yeah, 2.85%. Sorry, yeah.
Notice a lot of the banks that haven't failed have just gone up in weights in the index.
Yeah.
So it seems like the index is actually better quality now relative to like a couple months ago.
Yeah, so I think that presents an opportunity, right, Bailey? So I'm guessing that you're probably, if you're bullish on the regional banking sector, you're probably going to do it through what? Through KRE, or are you going to do it like with individual names?
I have Wells Fargo, but that's not regional. Other than that, KRE, FIS, but that's not really. It's a bit different. But yeah, just KRE. don't have time to look at like every bank's balance sheet. So
Bailey, tell everybody you're studying finance in college, right? In uni.
yeah, I'm last year finance student.
Wait, so are you graduating this year or are you graduating next year?
QT.
Okay.
I graduate in June of 2024.
Okay. Gotcha. Perfect.
Yeah.
All right.
All right.
Awesome. Thank you for being on, man. Really appreciate you watching.
Cool.
And
Thanks for having me.
all right. Thank you, man.
See you later.
All right. Last person for the day.
Bye.
Familiar face.
There's
Technical
man.
Trader
Oh, look at
Wong.
him.
Technical Trader
what's
Wong.
up?
He got
Did
some
you,
of them
see,
bricks.
did you see the Twitter clip I made of our interaction?
Yeah, I did.
That
What
was
was your reaction
I did
when you saw
YouTube
that
too.
Twitter clip?
that was gold, dude. That was so
Look,
good.
it was my first time live, so I was very nervous. I'm still nervous right now, but yeah, I never thought I would make it to Twitter or something. I'm glad you guys laugh. You know, I like to make people laugh.
No,
yeah.
the thing is, he totally asked for it, and you did not fail. You delivered.
Dude, that was awesome. Thank you for the compliment, by the way. I wasn't there to receive it, but I was like, yes, thank you.
No, we're gonna remind all 570 people here.
Oh, you're gonna play it? You're gonna play?
What
All
you
right,
did
cool, cool.
technically. No, if we're gonna embarrass Carlos in the beginning of the stream,
Oh
you're gonna
yeah,
embarrass
no,
me
that's
in-
true.
in
That's
the
only
back end.
fair. That's only fair.
This is what
This was an internet finance junkie smackdown.
All right, here we go. This is his first time on the stream. Here we go. How long have you been watching the podcast?
I've been watching. I just got in recently, probably 3 months ago, and I just find you guys very interesting. Yeah.
Thank you.
Why?
Appreciate it.
I mean, you really need to pay your internet bill,
Why?
man. Come on.
Seriously.
Thank you. Appreciate
Why?
it.
Why? Okay, so
Except
Boo.
compliment to move on.
Right. This is the part where it emits like translation. Say
Tell me
something
why
nice
you like
without
me.
Well, there's
okay.
440 people here. You got something nice to say? You can go
No.
ahead and-
All right. I mean, I really appreciate that. You are definitely not the most knowledgeable, and that's not insulting. That's just
You
okay.
see? You. All right, that's all you need. He just
It was epic. You're like, admit you don't know shit, but you're kind of funny.
dead. R.I.P. Right? That was great.
All right, what's your question, bro?
Yeah, who are you gonna kill today? Who are you gonna snipe today? I'm not asking you any questions.
No,
bro.
I'm not starting. Okay, so my question is, should retail investors do valuations for companies they are invested in? Because so the way I look at it is that if Wedbush got SOFI wrong, right? They put SOFI at 250, so they definitely got that wrong. And if Wedbush is gonna get their valuation wrong, what are the chances that retail investors are gonna make a right valuation for a company, right?
This is an interesting question. Go ahead, Chris.
Yeah.
I think that's a very, very good question. Unfortunately, I think even the best on Wall Street can get it wrong, and they can get it wrong a lot, right? So I think this is the one area where retail investors and Wall Street both are in the same boat, where it's like, who do you listen to? Because in the same week, you had the guy from Truist come and say, no, this is not a $2 company. This is, I mean, he didn't say that. He said, this is actually worth $9, $10. And then another person comes up. So even among people who are supposed to be professionally managing portfolios and really doing evaluations, they get it wrong. So what does that tell you? Like, who should you listen to? And the honest answer is, I think you should be listening to people who are doing the research and presenting it in a very transparent way, and not just a 30-second sound clip of, oh, I think this is a bad company, right? So if you find people that can actually do real deep dives into a company, explain why they are what they are. I mean, I know that there are certain really good authors on Seeking Alpha that I follow that, like, I trust their opinion because I've seen them actually do their due diligence, do the homework. They actually show where the weaknesses are, where the strengths are, and really just follow some of those people. I think could be helpful. Like for me, I look at data-driven investing, Chris Hager. Me and him had a debate a while ago when it came to SOFI, because I had some misconceptions, right? Like I was that Wedbush guy, because those misconceptions sometimes need to be addressed. And the minute that they're addressed, they can change, and I can change my opinion. That's how it works. So I would say you just look for people who are reputable, trustworthy, know what they're talking about, and have proven time and time again to be accurate in their thesis, and then see where things go. I do, however, have a very strong opinion about most retail investors in that they should stick to index investing, not just S&P 500, of course, but if they're bullish on, let's say, his particular sector, just like the guy right before us, Bailey, that was actually really good. I'm glad that he's buying into KRE, because that is a way to play an entire sector without having to figure out which companies to allocate money to specifically. So he's bullish on KRE. I think from a retail perspective, that's a perfect way to do it. So I would say, if you're bullish on tech sector, QQQ. If you're bullish on industrials, look at the industrial ones. If you're bullish on regional banks, that's like one of the greatest inventions of, I think, the 21st century when it comes to investing is the indexes. You'll have to pay a little bit of premium, to be honest with you. It sucks to pay a little bit of VIG, but at the end of the day, you're also not having to deal with allocating resources and allocating money per individual company and all this other stuff. Financial modeling is a lot more complex than most retail investors. So indexes are the way to go.
All I would add to that is consider the fact that the intentions and the goals of the analysts that you see on television are different from your goals, and also their time horizon is different. So you might be looking at something that you want to hold, say, for 10 plus years, where they might not have the luxury of doing that. The other thing too is they understand that by them merely saying what they believe is going to happen to a stock, it has the ability of affecting the stock, whereas that's not the same case for you. If you're starting out in investing, I think the way that you make money, I think anybody that's made any real money, most of the time it's when you see something that other people don't see. So figuring out what your metric is to see something that other people don't see. Like, I'm sure Amit will say that he saw something in Palantir that the markets didn't see. Kris will say, I saw something in Truist in their numbers and in the sector that other people might not have seen. And I think if you're just starting out your investing career, it's important to identify and test your own metrics, your own ability to make those decisions, because that's gonna help you as you grow, as your portfolio grows. It's gonna help you make bigger bets and be comfortable with larger and larger allocations. So it's an important exercise regardless. You have to make a call and see if it was right or wrong. It's not about, I'm going to put the money here and let it ride, unless you're doing like an index, right? Because you say, I believe in a general sector. That's great. But that doesn't necessarily give you the conviction to put the massive amounts of money that you need, especially if you want to make those 10, 20x returns in smaller market cap companies that maybe the market hasn't come around to yet. So
I would add two things to that as a novice. First thing, something I put into practice is if I'm picking an individual stock and I'm not listening to the earnings call and reading the earnings presentation, I have zero business. Like when I decided to start going into Truist, listen to the earnings call, read through the presentation twice, once with Kris, once by myself, really tried to get it, and then made my decision. Because if I lose money, Kris is not on the hook for that. That's me, right? I've got to live with that decision. So that would be my biggest thing. You got to listen to the earnings calls for these individual companies. Like I listened to Netflix earnings calls from 2018 for fun, just because I want to know how Reed Hastings was thinking about the business back then to inform.
That's how he gets all the ladies. That's how he gets all ladies. But
like, babe, did you know subscriber growth in Latin America was 33%? Like, that's
right. Guess what their penetration was in 2018.
Oh my goodness. All right. And then the final thing is, I don't care what the stock is. If you don't have a qualitative story, like forget all the numbers. If you don't believe SoFi can be the one-stop shop for financial services for Gen Z millennials, if you don't believe Palantir can be the operating system for the world, if you don't think Enphase could be on every single house in the world, right, much less America, it's going to be very hard to hold that company or even think of investing in the individual stock. There has to be some type of qualitative story you're bought into. And if you're not bought into that, all the numbers in the world can't keep you hooked onto the stock.
Usually that'll come from something that that I posted something on Twitter, actually, that comment of what's his name? We was talking about about the advantages that retail investors have over institutions. What it comes down to is like if you're in a specific industry, say you're in the medical field, the medical business, you're going to have such frontline access to information that might not hit markets for a while. And if you know how to capitalize on that information, you can make a lot of money because you're actually seeing these things happen long before it might be reflected in your earnings call or in the stock price. That's why it's important to invest in what you know. I'm assuming that you're really starting your investing career right now. That's a great place to start. Like me, when I started my investing career, I just started a company with a couple of friends of mine, and we were spending thousands of dollars on Apple products every month. And I said, why don't we take 5% of our income every month and start investing in the company that we're giving all of our freaking money to. Now, my partners at the time didn't listen, but I did on a personal level, and it did really well for me. Why? Because I knew the company really well. I was following the news anyway, so it didn't feel like investing. Do you know what I mean? I was following the news anyway. It felt like I was following a sports team, the way people would follow sports teams or whatever other interests you could have, video games, except I was making money at it. So that would be my
And one thing, like, I am not I'm not on Wall Street. I don't work for a bank. I am genuinely very just interested in investing. And so when I do a deep dive, I really go into it. Like I'm pretty sure Carlos was on the call with us. Like on Saturday night, I think it was almost like 11 o'clock. I spent about an hour and a half, like just going through the financials, going through the sector, just telling these guys what
Chris
I thought.
pulled up movie clips to make his point.
Yeah, I mean,
we were sitting there watching The Aviator.
We were watching. He was like, "No, you guys, you have to watch the scene for 7 minutes to understand the thesis." And I'm just like, "All right, I guess we're watching."
It's like just give me a poem, dude.
I was like, "Give me a poem, I'll buy it." Like that's how deep this guy goes into it. And I don't think most people, including myself, are ready to go that deep. And until you go that deep, I don't think it's worth buying an individual stock because you're getting fucking married to that company through thick and thin, right? So you got to go deep.
What company are you looking to buy that you're either looking for someone to talk you off the edge or push you off the cliff?
Right now, I actually haven't been looking at much. I've just been doing technical analysis on Palantir. So yeah,
that's valuable right now.
Yeah, so
what have you found? What have you found? Tell us, please.
Yeah, so we're at $15 now. It was $10. It was $10 when I bought it. Thank you very much because I've given you guys all of these incredible gains. I bought it at 10, then it skyrocketed now, and so.
Yeah, I mean, would you guys let me like do a live technical analysis?
Yeah, go for it, man. We'd love that.
Okay.
Go for it.
Okay, so my laptop's lagging right now, so I'm gonna try my best. Share screen.
Yeah, we'll limit it to 5 minutes and go.
Yeah, because I gotta.
I'm gonna give him the main screen.
He's the main screen like this.
Okay.
Oh, no, that's like me.
Okay, so Palantir. First, we are gonna look at the 1 day, the 1 hour, and the 1 minute. So on the 1 day right now, as you can see, the RSI is above 70, which indicates that it's currently in the oversold territory. But as you all know, Palantir doesn't have a lot of bearish sentiment right now.
Overbought, right? You just said oversold. You
meant overbought.
There you go.
Yeah. Okay. I got it wrong. Okay. So, and as you look at the MACD right now, there doesn't seem to be any decaying in the MACD histogram. So it's not in the bearish territory right now. And if you look at the volume right now, the 1 day, it seems to be consistent. There doesn't seem to be a drop in volume, which means there's still a lot of buyers in the market. And if you look at the 1 hour, all right, it's again around the 70 range, which indicates there's a lot of buyers right now, and the MACD is slowly curling down, but it doesn't seem like it'll stay there for very long. The volume, obviously, aftermarket is going to be much lower. And let's look at the 1 minute, which again, 1 minute is not going to be very easy to understand, but I'm going to try my best here on the fly.
This is so awesome, bro. This is so cool that you can do this. This is so dope.
I just need to interject here. Maybe you guys think a little bit differently. I think the danger with the danger with what you're doing is you're looking at a very tiny, small data set when the company and the stock price, the movement of the stock is much larger than that. I think what you need to do is you need to zoom out and start big. Start big picture. Okay. What are the general moving averages? What has this thing been doing over the 21 day, the 50 day, the 100 day? Where are we in that macro before you go and you zoom in? Because this does not tell you what necessarily the stock price is going to be doing. This is traders. These are day traders looking at.
Wong, I would highly like next time. What's his name? Vitaly is on. Yeah, this is like Vitaly's realm. Like, yeah, this is one of the things like that makes us as a finance podcast probably good in that I do deep evaluations into companies like balance sheets, financials, all that good stuff like that. You know, Amit learns from us, of course. Carlos and Vitaly, they really do a lot of the technical analysis that I'll be straight with you. I don't do nearly the amount of technical analysis that I should sometimes. I do more on the long lines of momentum, but not nearly as deep as you're going into. But believe it or not, I actually do want to learn how to be a little bit more technical. You know, I
Especially
think-
when something's up 100% in a month.
Yeah,
This is really
exactly.
valuable right now. Super
like
valuable.
in other words, if you want to get from New York to Los Angeles, right, before you make any, you're going to set a GPS and it's going to tell you the general highways to take this highway to this highway to this highway, the overview, and then you're going to start looking in the macro, the small little turns that you're going to need to make along the way. It's very difficult to map a path from New York to LA looking at every little turn first. And I think that's why it's important to zoom out. So you go to like the monthly or the weekly, zoom out, look at the overall chart, see where you're at, because that's going to tell you, have we moved up off the mean? Start drawing some lines, look at some basic trends, and then you can start looking at what's happening. But I mean, personally, looking at what's happening at Palantir over the course of an hour, to me, I don't think that's
Amit, can you put this quote on from Brian Wong? I love that quote. That is a quote worth writing down.
Learn
somewhere
uptrend, downtrend, breakouts. I'm gonna definitely
steal this and put it into my book in the future whenever I write.
Fundamentals bring the why you invest. Technicals bring the when you should invest.
That's good, right? What do you think of that, Wong? What do you
that
think
makes
of that?
Listen, that makes total sense. The
Okay.
when, and that's the point. That's the point. Yeah, the technicals.
Go ahead, Wong.
Yeah, I don't purely do technicals. I always look at the fundamentals too, but I do think technicals is something on YouTube that a lot of people don't talk about, right? So I try to bring that.
It's a good niche.
Yeah.
It's a great niche, especially as the bull market gets there. I think your channel it'll do well because people want to know, is Palantir overvalued, right? It's up 100%, right? C3 AI and the technicals speak to a lot of it combined with the fundamentals,
Yeah.
right?
So I think one difference that me and Vatali have that I don't use SMAs, so I think that might be one difference. Yeah.
Moving averages are key, man. They do give you a good indication of, again, when to pull the trigger on a buy or sell, right?
Yeah. For me, that's like the RSI and the MACD, but yeah.
RSI is not always an indicator of that, though. This is where you have to go back. This is what I would recommend. Take your thesis and apply it to some big mega cap companies. We'll go back and look and see if your thesis would have helped you to time something like Apple or Amazon, right? Or Google. If you would have caught those, if you would have caught those trades, test your own thesis against some historical data and see how you would have done if you just listened to your metrics. Because I think something like even simple moving averages are super important on a basic level of technical analysis.
Right. So on the RSI term, I don't know how much time we have here. So
we got like
it
2
depends
minutes
on the
left.
stock sometimes.
Oh, you're
okay.
still
So this is the last
yeah,
one.
we gotta end it. We gotta end it, Wong.
All right. Let's end it.
Hey guys, by the way, don't like someone posted something wrong with the chart. Don't do that. That's a dick move, man. Like,
come on, man.
I know, man. Like I that's not the kind of people that, believe it or not, if you're that kind of person, please don't follow us. I just don't prefer people like that. All right. So everyone is respectful. Everyone should, respect. Everyone's got opinions on things, but that's just being a dick. Don't do that.
Yeah, come on.
Yeah.
It's bad.
Let's share this last thing and then we'll be up.
All right. So this was something really funny that my friend put it on Twitter. I actually
be demonetized.
No. It's not.
Okay. Oh, I saw this. Oh, it's a head and shoulder pattern. Put my stop loss. RSI, there it is.
This is me watching Alex Karp speak during earnings calls, bro. It's like, don't bang on the table, please, for the love of God, don't bang.
I love that because that's exactly what happens. You try to apply as many fundamentals, like to a technical analysis you want, and then some shit happens with the stock, and it just goes in the opposite direction.
The trade goes right against you. Yeah. Right. It'll trigger your stop loss. You sell out, then it skyrockets away from you. So it's a combination of all these things.
Thank you, Wong, for joining. You're welcome back anytime. And when we have Vitaly, you can do a full technical with him. We'll get you on and give you a good 10 minutes to fully do it with us.
Thank you so much.
You do it on end phase. Do it on end phase. So get your end phase ready. One day you'll come on and Vitaly will do it with you.
All right.
Thank you for being on, man.
Like, subscribe, all that jazz, the new channel, blah, blah, blah.
We have 500 the whole night, boys. This is awesome. And so this is great. Thank you, everybody, for being here. We were stuck in the 400s for a week. I don't know if we're out of the 400s yet. We'll see over the next couple of days, but we're in the 500s, which is great. So thank you all for being here. It's awesome.
And Chris, we won't talk later. Let me know how to add you on the Apple Watch.
Oh yeah, let's do it, man.
Hit me up on the WhatsApp. Yeah.
I'm on the workout grind now. I
Yeah.
think
By the way, this is a daily reminder, guys. Get in shape. Get in shape. Go to the gym. Run around.
Yeah.
Do stuff.
No matter how
heavy,
much,
lift
dude,
heavy
no matter
stuff.
how much,
Sweat.
yeah. No matter how much wealth you have, if you don't have health, then all that money is just gonna go to your kids and someone else. You know. So,
Yeah, so Chris and
screw
I
that shit. I'm gonna spend my money on me.
right.
You know?
No, we're gonna get there. We're gonna start doing some challenges, right? Some calorie challenges, movement challenges.
Yeah, let's work our way up, dude. I mean, I was at Disney walking around, my feet were hurting. I was just,
whatever, dude. You were in the freaking military, okay? Like,
Were you eating good at Disney? Were you like really eating good?
hell no,
Sure.
dude. That shit is
and
all
cheese.
processed, like cheap food. Like Disney's making a killing right now. Eat like, oh my god, the food was disgusting, but you know you have no choice. You're locked into the park, so you're paying for like all this processed bullshit. It was yeah, whatever, man. I was just the one thing I did not like when I was at Disney. There were grown adults riding around on those mobile scooters,
oh yeah,
and I was just like,
yeah.
you need to walk, like. You know, like the scooter, like I could see you. The thing is, I truly believe some people are handicapped. I'm not like saying anything against them. I'm just saying some people, what they would do, they park their scooter and they would run to the line, right? And like go to like the roller coaster. I mean, to the show and everything, like perfectly fine. They would actually like be pace walking faster than me. So I'm like, did you really need the scooter? You know, like I don't know if you have got some kind of condition.
They were
Every
trying to
time
conserve
I saw
their
that.
energy.
And the thing is, like, and if it's one thing if there was like maybe 1, 2, 3, but dude, they were just everywhere, you know, which is just like
it's called e-walking. Right?
I don't know, bro. I wasn't a big fan of that. I was just that's when I was like, you know what? I messaged these guys. I was like, Carlos, I need to get in shape. I don't want to be.
That's why you messaged us right then.
Yeah, dude, I did. I finally completed all 3 of my rings after a while, like on Apple. So on Apple Watch, so you can set the time, you know, thing to basically have challenges. So I finally completed all 3 rings in like the last 3 months. So I'm like, you know what? If I have someone on the other side that looks like a goddamn Adonis, by the way, you guys, one day maybe we'll put a picture of what Carlos looks like with his shirt off. But man,
if we do that, the amount of DMs that will be coming.
Yeah,
I'm still trying to get back to that. But yeah, that was me at my peak.
Yeah, no, dude, I was like, ooh. Damn, Carlos.
Yeah, no, I wasn't fucking around.
All right, guys. Oh, look at the 2 girls. Yes, please. Alice wants to see it, and bro, as soon as we post this picture, the DMs are just gonna be crazy.
Thirsty ass women. Carlos is married. All right, stop with that. All right.
No, I'm getting back. I'm feeling it coming back. It's crazy how your body does respond when you put in that much work for so many years. How you get back to it. So yeah, I
felt really good after I walked and just did all the stuff around Disney. I felt good. And I was like, yeah, you know what? I want to feel that endorphin high again that I used to get, you know? So now I'm like, you know what? Time to get back into shape, especially with the summer coming around. Definitely got to do it.
All right.
Yeah. Chris, you're a bigot for liking me. And with
Probably.
and with that, I'm out.
Bye. All right, everybody. We'll see you tomorrow. Thank you all for being here. Bye-bye.